Ladies and gentlemen, you want to know how this trade turned out? This is a live trade on US30. Watch the rest of the video to see the full analysis and why I actually took this particular trade and shared it with our private community. By the way, this is a live trade. Okay, great. So, as you can see right now, I'm already in this position. I've already entered in this position right now. This is the US30 trade. Okay, so literally I'm risking around 26 pips, which is about 26 pips, right? And then my target is around 190 pips, right? So risking about $220, potentially make around $1,500. Okay, so this is my setup right here. So let me just show you guys what made me take this trade. And by the way, let me just share this trade with the private community right now. Okay, as you can see, we have confirmation there. You can see the price reversing. So I'll go ahead and share this trade with our private community right now. And just do that, and then I show you guys why I took this trade. Okay, US30, one of the most volatile indices. Very good. Yeah. So let me just go ahead and share this right now with our private community. Just give me a second there. Yeah, it's right here, like that, and we'll share it like that. So, what has made me take this particular trade? So, if you look here, what we have is we had our nice short-term uptrend, which always I want to find. When we have that, then we have our QML, we have a low, we have a higher high, and we have a break of structure from the lower low right here. And then in this case, we didn't really have like what we usually have, but what we had was trend line liquidity. So we had this trend line here, right? We had 1, 2, and 3 touches right there. And after that, we saw the market breaking that trend line liquidity with the momentum candle, this one right there, and coming to this level here, which where we have a rally, we have a base and a drop. Okay, we have a rally base drop supply zone right there. Okay, yeah. Let me go to the higher time frame and show you guys what is happening right there. So if you go to the daily, let's see if we're going to see something right there. So let's zoom in here. Yeah, so you can clearly see that the market literally the upside to the momentum and dropped with a lot of momentum. Okay, and then the market returned to that level, then base a little bit, and then now we're seeing the market actually going to push the downside. So this is a rally base drop. Looks very obvious. This is a nice selling point at this level. It had a lot of price reacting with momentum candles. It means that we have unmitigated orders here. So price has to come to this level to mitigate these orders which are right there. The same thing here. We have a big drop there. Price has to come back that level and then drop, right? Yeah. So let's go to the 4-hour time frame. Let's go to the 2-hour time frame. So that I show you guys why I am taking the trade. So as you can see from here, so let's go to the 4 hours. So in the for and by the way, this is 5 in the morning, 5 a.m. in the morning. Yeah, I'm recording this video, guys, for you this early. I know, right? Yeah, so please make sure to subscribe, like the video, comment in the comment section, because I truly value you guys, and therefore I try by all means to provide valuable content for you guys so that you see the full process and everything else. So what we have is a rally. It's very clear rally, base, and a drop, and you can see price clearly coming to this level with some nice momentum. Of course, we're always going to expect this. We're always expecting our price to break this level here with some sort of momentum candles. Why? Because it tells us that price is headed for a tradable zone, which is right there. So this is our tradable zone here, where we have our fresh supply zone right there. Of course, there is no guarantee that this particular trade is going to win. And it tells that they know for sure that the trade is going to win. They're just lying to you because nobody knows. What you do have is a higher probability of one thing happening over another, which is our age. Okay, and that is not on a trade by trade basis, but rather on a series of trade basis. So you really need to understand that. That's the reason why you always have to make sure that you put the stop loss in and yeah, take the trade, because that trade you might be avoiding, that be the next big win. We have no idea which trade is going to actually give us big money. That's the reason why we have to take all trades that meet our criteria. So this is pure supply and demand principles, right? Combined with our price model strategy. The trade, the setup of the trade here. You guys, I hope you find value in this. So later I'm going to give you guys the second update and the third, depending on how this trade goes, whether the trade goes into profit or goes into losses. I'm going to update you guys. Take care. Hi, welcome to the second part of this video. As you can see, the market has hit our stop loss right now. We are out of this trade. This trade was had a 25 pip stop loss, and right now we are out of this trade. The trade did actually try to go in our direction. So if you remember, we actually entered from around this level right here after the market rejected this level right there, and then the market didn't even try to go in our favor. It just literally went to the upside a little bit, then retraced a bit, and then pushed to the upside, and that's how we were taken out of this particular trade. Right, this was US30 on the 1 hour time frame. Yeah, the trade was actually sent to our private community, as you can see here, and we took a loss, which is normal, which is actually part of the game, and then we're supposed to actually actually take the hit. Let's take the hit and wait for the next opportunity, right? That's how it is. So this trade I was risking about $220, which is here right now. It's a loss. $220, just lost $220. It was my risk, which is actually within my normal 1 to 3% of my account. So right now, yeah. So any lessons to learn from this trade? Now, if this trade appeared the following day or any day, I'll still take this trade. Why? Because it met my criteria. Do you guys remember that there's a random distribution between wins and losses in any given set of variables that define an age? Okay, anything can happen at any particular time. That's the reason why you're supposed to predefine your risk. Know exactly how much you're risking on that particular trade before you go in, and fully accept the risk. Okay, fully accept the risk so that you don't get to panic when the trade starts to go against you. Okay, this trade met our criteria, and then it just didn't work. This is just normal. It just didn't work. This same trade would have just rolled down to the downside, but they did, right? So there's no need to actually be sad about it. So we take the loss, and then we manage our risk Just imagine if I hesitated to actually get out of this trade right now, I'd have lost maybe almost like $100 more. But once the market came to my stop loss, I had to let the stop loss do what it's supposed to do, which is prevent me from losing a lot of money and also help me invalidate trading setups. So those are the roles of your stop loss, and you have to let that stop loss play its part. Okay, you guys, I hope you have a great weekend. Today is Friday in our country. It is around 20 p.m. and I'm not looking I'm not looking for any trades right now. I'm just going to rest, wait for Monday morning, Monday opening, so that we see for other opportunities. You guys, I hope you had a great profitable week. If you did have, please make sure that you evaluate yourself during this weekend. Check out your setups, see what you can learn from that, and improve, become better in everything. All right, the forex is not going anywhere, it's still around. So please don't be in a rush to make money. Learn the skill and let's get it. You guys, until next time, goodbye.